Cyber liability insurance has changed a lot in the past 2 years. In this episode, we welcome back Joseph Cook, who's a cyber liability insurance expert from the Arizona Group. So if you're looking for a straightforward update on the state of cyber insurance today, this episode breaks down how we got here and what businesses need to know moving forward. Joseph first joined us in season 1, and since then, the cybersecurity insurance industry has evolved a lot. My job, it's going to be to break it all down in a clear, nonsense way so you know exactly what matters for you and your business. Now, welcome back, Joseph. It's great to have you on the show, and I look forward to learning what has changed these past 2 years.
Thanks, Scott. Appreciate being here.
Yeah, no, it's always great to see you. Let's just dive right in. So, has the conversation around cyber liability insurance evolved over these past 2 years?
So yes, it's changed quite a bit. You've seen a lot of activity in terms of reinsurance dollars, either giving more capacity to existing carriers or new carriers entering the space. So overall, the cyber liability market is actually softened right now. And when I say soften, I mean either there's been a reduction in base rates, or potentially on your renewal, you're actually seeing a reduction on a year-over-year basis. So unlike most areas of insurance, that's good news, right? Property remains hard, auto remains hard, but cyber is soft right now.
Could you kind of explain what do you mean by reinsurance? Sure. And then is soft meaning downward pressure, or?
Yeah. So reinsurance, silly as it sounds, insurance carriers buy insurance on the insurance that they sell, and that's called reinsurance. So just like you as a customer may buy an insurance policy, and that policy has a set of terms and conditions, when insurance carriers buy reinsurance, they have what's called a reinsurance treaty, and that also has a set of terms and conditions. So as things have evolved in the cyber liability marketplace, there's been enough of a positive change that reinsurance carriers are either investing more dollars into the existing carrier contracts they have or treaties that they have, and or are onboarding or entertaining new contracts with new cyber liability insurance providers.
Wow.
So this influx of dollars from reinsurance carriers ultimately lessens liability at a direct basis to the insurance carrier, which means they're going to get more aggressive, right? So they're going to either A, open up terms and conditions, B, they're going to reduce pricing, C, they're going to offer their product to more classes or industries, or D, any combination of the above. So when I say soft, I mean there's more appetite for it, and pricing is more advantageous right now.
That's incredible. Yeah, because I just had to renew my my auto, home, all these different policies, and I think I'd be gracious to say they went up only 20%. I think they went up significantly more. I probably need you to quote those out.
We can talk about that offline, but yes, that's a different experience, right? So many areas of insurance right now are what we would call hardening, or have remained hard, meaning there's less appetite for it and premiums are going up. Whereas cyber is one of the few areas, particularly to commercial insurance, where it's actually soft. So there's more appetite and premiums are going down.
Right. And, as certain areas of the country have fires or something like that, that's going to probably decrease appetite, right? So, in your opinion, have businesses become more proactive in integrating cybersecurity measures with their insurance policies, or are they still sort of playing catch up?
It's a little bit of both, right? I certainly think that if you were to look at the overall hardening of environments pre-COVID, post-COVID, they are better now than they were pre-COVID. I think you would probably agree that as everybody went to work from home during COVID, you had a lot of exposure created where there was many small, medium, even large enterprises that were just not set up from a cybersecurity standpoint to manage that kind of work from home approach. Over the last 5 years, I think there's been a pretty good effort by most entities to harden their cybersecurity environment in some way, right? And holistically, I think we're in a better place now than we were before. I think the challenge, of course, is the challenge that will always remain in your space, which is it's an ever-evolving attack vector. It's an ever-evolving marketplace of as a service for ransomware or fraud or whatever it may be.
Right.
So how do you keep up with that dynamic environment from a cybersecurity perspective, right? And That's a couple of things, in my opinion. One, the answers are impermanent, so you have to learn how to ask good questions. Two, you have to have a real relationship with your cybersecurity provider. And if you don't have a cybersecurity provider, you probably need one at this point, right? There's an ongoing closed feedback loop where you need to constantly be reassessing and then readdressing.
Yeah, it's still from our perspective, from a general cybersecurity perspective, it's still mostly an uphill battle. Definitely, there is more willingness for owners to have this conversation, but for the most part, most people think they're fine. So I kind of have this analogy with health. Like, I don't feel bad, so I must be healthy. Could be identified and resolved if they were to, let's say, get an annual physical or something like that. But yeah, definitely their willingness to have the conversation has improved. But so what would you say are some of the biggest misconceptions businesses still have about cyber liability insurance in 2025, if any?
Yeah, I'm gonna tie back to the last question because I think there's a salient point there. One of the biggest misconceptions that people still have is that outsourcing products or services is outsourcing liability, and that's not necessarily specific to cybersecurity. It's really a general operational business perspective. But I'm sure you've heard retorts of, "Well, it's in the cloud, so it's not my problem," or "PayPal processes my payments, so it's not my problem." I'm sure if you look at the contract, PayPal is not agreeing to make you whole if there's a problem with a payment that they process. If you look at the contract with Microsoft, because you use Azure,
Right.
Microsoft is not going to make you whole if there's an issue with the cloud. Never mind, regulation as it relates to state laws or GDPR or whatever it may be, right? So
Right.
I think there's a general misunderstanding that just because you outsource a product or service, you've outsourced the liability, and that's just fundamentally untrue, right?
100%.
As it relates to cyber liability insurance specifically, I think the biggest misconception is that all products are still created equal. So let's just chase the bottom line premium. And that also is fundamentally untrue. There's a wide variance in product spectrum. There's a wide variance in what product may be relevant to your business size or business type. So these folks that are just seeking out the lowest premium they can possibly find may be exposed in ways they don't understand.
Yeah, so true. Same in our industry. Exactly. It must be a pretty universal thing. But I think it's very critical here that they really do understand those terms and the conditions, not just the price. When I tell you that we recently, had to do this for our personal insurance, I was very cognizant. Like, one of the insurance companies was much cheaper on the auto, the same on home, but significantly cheaper on another component, maybe an umbrella policy or something like that. But then when we dove into each policy, each respective policy, and you see what those things are that they include or don't include, it makes all the difference in the world. So.
Yeah, absolutely.
Yeah.
I think that there's no better time than now, with the market being soft from a premium perspective, to try to lock in good terms and conditions, right? So prices are good across the board with most carriers at this point. It's probably the best time you could take the opportunity to explore a better set of terms and conditions when everything's low at this point.
So, yeah, and that's still music to my ears. So with the cyber policies actually having a moment of competition in this regard, are insurance companies experiencing rising costs in this particular area, or what? Like, what's driving that competitive openness to taking on these claims? Because last year or 2 years ago, certainly when we spoke, it wasn't that way.
Yeah, there's a variety of things. Again, the reinsurance reinvestment is huge because that takes direct balance sheet risk off of the insurance carriers. But beyond that,
Okay.
The true underwriting has entered the picture, which has allowed them to identify better risks from worse risks, to give better pricing to better risks, to give more accurate or reflective pricing of the risk to worse risks.
So, like, maturity, would it be like, sorry, like maturity of this market?
Yes, yeah. The market is
Okay.
maturing away from an artificial process, away from a inelegant or lack of underwriting process to a real underwriting process. You've
Okay.
got a lot of activity as it relates to value-added services that are coming into the picture, right? So much like if you had an older insurance product, say general liability or employment practices, where carriers would have national or regional agreements with good companies to be response teams or even pre-claim assistance teams as it relates to a potential claim scenario. You're seeing that develop in cyber as well, right? So you've got contracted forensic IT firms regionally or nationally. You've got contracted penetration test companies regionally or nationally that are all now being inclusive on a fully subsidized or partially subsidized basis through your cyber liability insurance carrier, which is helping them harden their client base, their book, from a cybersecurity posture perspective, which of course decreases their risk, right? The biggest vector right now is push payment fraud, funds transfer fraud, invoice manipulation, all your cyber crime type areas. 80% of businesses experience that in some form or fashion in 2024 in the United States.
Yep. Yep. Absolutely. Yep. That's that one, and any kind of phishing, which is probably in the same category that you're talking about.
Correct. Yeah. Social engineering is also in cyber crime, but there's good news on that front as well, which I'll save for a later question.
Sounds good. So this one here is a little bit, I was thinking about this question last night, and most people probably have had experience with a claim with an insurance company, regardless of medical, right? We all have medical
Sure.
claims and all that.
Yeah.
But when it comes to this type of insurance, if a claim's made, and I might not word this the best way, but if a claim is made for a cyber issue, an event, what effort will the insurance companies typically make to make sure that any policy requirements where you've checked off boxes, you've signed, that you've met this criteria, an event occurs and the insurance company is contacted, and are they going to now like send somebody in, like you said, a forensic person, as well as somebody that's going to go, here's what they agreed to. Can you
Sure.
make sure that these all really are in? Because if they're not, here's what we might do.
Yeah, I'm going to restate it just for the benefit of the listeners, right?
Okay.
So essentially, you're saying, I as a customer maybe filled out an application to apply for a cyber liability insurance policy. In that application, I said I had certain cybersecurity controls and X amount of records, and I spent so much on IT, so on and so forth, and I signed it, and then I bought a policy based on that application. In the event I have a claim, how does the carrier treat the information in that application against the management of my claim? Right?
Correct. Yep.
Okay. So that's not a secret. It's published within each policy, right? And what you're looking for is called the representations or warranties clause. Different carriers name it differently, but it's the same clause. So essentially, within that portion of your policy, and this is always in every policy that's ever existed, cyber liability or otherwise, the insurance carrier states how they feel about the information they collected from you, how they applied that to underwriting, and what their position is at time of claim regarding that information. So this is what I'm talking about as it relates to not all policies are equal. There's a carrier in existence that has innocent non-disclosure as their representation or warranties clause. That's the most favorable to the customer that there can be. So innocent non-disclosure effectively reads as, unless we can prove that you were reckless and deliberate in your misrepresentation and knowing in that recklessness or deliberation that it would harm us, we cannot seek to deny your claim. That's pretty favorable to you. They have to be able to show a causal link from your misrepresentation that allowed them to determine that you knew they would be harmed by that misrepresentation. So in the absence of doing that, they cannot seek to deny your claim. That's very favorable to you, right? Conversely, you could have a representation or warranty clause that reads something to the effect of, we took your application, we took any emails we received from you and or your agent, and if any of that information happens to be inaccurate, we can void your policy ab initio, so at inception, and return you your premium, and we have no duty to defend you or pay any claim on your behalf.
So that's the other extreme.
Yes. So very wide spectrum, right? So when we talk about how they're going to manage that, it's not a secret. It's right there in your reps and warranties clause. And if you have an agent that does this for a living, they'll know what those reps and warranties clauses are by carriers, and they'll be keeping track of them. And they'll be driving you towards products that have better reps and warranties clauses, because with the risk being so dynamic, that is a key component of your policy language.
And so from your experience, do you see insurance companies making, or do they just abide by what those conditions are, is what you're seeing? Or even if you had one of the more stricter ones, are they like, do they work with their clients, or do they just pretty much go, you said you had 2FA, we don't see 2FA, two-factor authentication, your policy's void, here's your premium back?
Yeah. So first off, insurance is extremely regulated, right? So if they have policy language that they have to that they built in, they do have to abide by that.
Okay.
There certainly is the opportunity for some gray area. So one of the challenges of insurance legalese is that it's often not affirmative, right? That there's some level of interpretation there. Most of the carriers that you're going to work with, particularly any carriers that we would represent, A-rated carriers, are certainly going to try to be flexible. So if you represented that you had MFA, and it turns out maybe you had MFA in some places, but not in all the places that you thought you had it, they're going to try to work with you on that. There's only been one case since cyber liability has been a hot button issue where it was taken to court on a lack of MFA, and the carrier did receive the favorable ruling to decline the claim. But that's one case out of thousands and tens of thousands of claims, right? So it's certainly not the precedence or what's to be expected. That was a pretty egregious case on behalf of the small manufacturing company in the Midwest that indicated that they had MFA fully deployed and enabled, and they didn't have it anywhere, much less fully deployed and enabled. But yes, they're very agreeable to working with you within the confines of the policy language that they're regulated by.
So it is vital. You really do need to know. I think this section is just as important as what your limits might be, but
it's more important, right? So
okay.
One of the things that we often talk to folks about is look, limits are important, and you do want to right size them. But if you can't access your limit doesn't matter, right? So if someone wanted to sell you $1 billion limit on an insurance policy, they could, and they just exclude everything. So it looks shiny on a piece of paper, but you'll never get to that money. Versus if you had $1 million limit, maybe that's a lower limit than is right sized for you. But if you can actually access it, $1 million might get you somewhere or keep you operating, right?
Yep.
So yes, limit is important, but ability to access limit is probably even more important.
Yeah. And so you've obviously seen claims come through over the years. Real quick side question here is for our audience, I think it would be interesting for them is if an event occurs in which you feel you're going to reach out to your insurance company. So let's say you're the person that sold it. They reach out to you. Do the insurance companies, are they fast at helping you?
Yes, and particularly in this arena, because of the dynamic nature of the risk, because of how the risk will unfold. Think of a ransomware event, right? Timing is so critical in being able to potentially evict and recover, in being able to negotiate on the ransomware, or anything in between. Partial recovery with negotiation, all these different things. So timing is critical. So yes, right. They have a vested interest in being timely, because not only are they protecting you, but they're also protecting the claims dollars they may have to pay out on your behalf. So they're definitely timely.
Okay, cool. That's great. All right, well, let's move on. So we've talked about the different changes so far in these type of policies. Has there been any changes to the limitations or options that they're involved that they're offering today because of maybe the current threat landscape?
Sure. Again, with the market softening, a lot of the changes are positive, right? There are expansions on coverage, things of that nature. So we talked about, social engineering. We talked about funds transfer fraud, invoice manipulation, all these types of things. Those fall into the bucket of cybercrime.
Right.
So on a traditional policy, you'll see cybercrime limits be somewhere between 100,000 and 250,000 in limit. And in some cases, depending on what your product is, you may be able to buy more than that on a primary basis, but in some cases you may not. There's now a whole subsector of the market that's produced itself for excess cybercrime. So let's say you're an operational business and you move money. So maybe you're an accounting firm, right? Maybe you're just a larger entity that has large bills to pay, or vendors you work with that you transact money frequently. You can now buy specific limit just over the cybercrime. So if you're okay with $1 million first party and $1 million third party, but you're not okay with 250,000 in cybercrime, you can go get 250 over 250. You can get 500 over 250. You can get 750 over 250 or more if you need it. So excess cybercrime is really interesting. There's a couple of products that have availed themselves that are true, essentially a true umbrella product. So difference in condition and difference in limit. So they sit over the top of a primary policy and they make up any difference in condition and they make up any difference in limit with an own limit applied. So yes, there are changes, but right now with the aggressive nature of the marketplace, the changes are good. There's more affordable coverage. There's more flexibility in coverage. There's an excess marketplace that's availing itself. It's a good time right now.
Awesome. That's great news. Yeah. So, so I know we had to renew ours a few months back. The requirements, although you're talking about a more favorable environment, but the requirements grew year over year. So, so not sure how that correlates to this more aggressive market, but is that what you're seeing? What we experience, that although maybe pricing is better or terms are better maybe and all that, but the insurance companies aren't letting up on what the requirements are.
Sure. So part of the underwriting process is to try to more accurately provide better rates to those with a better cybersecurity posture. So they're going to retain the more true underwriting process because that does allow them to price more aggressively where they should, versus if there is a bad risk out there, and by bad risk I mean less of a cybersecurity posture, they want to price that appropriately, right? In your case, being a cybersecurity provider, there is inherent risk to that. Right. So some of that is class oriented, class of business oriented. So if you're, a cybersecurity provider, if you're a SaaS company in fintech or med tech, if you're a legal firm or an accounting firm, you have a lot of sensitivity of information. So they're still going to have a lot of requirements because there is inherent risk to your business model as it relates to cyber liability.
Got it. Makes sense. Absolutely makes sense. Okay. And so we talked about policy terms and how, there's these two spectrums and whatnot. Are there any other policy, let's say, exclusions or clauses that our listeners should be more aware of?
Yeah. So obviously representations and warranties clauses. I know we talked about it earlier, but I want to bring it up again because that is absolutely critical to accessing your limit at time of claim when you're your most vulnerable and most needy, right? Beyond representation and warranty clauses, sublimits are something to pay attention to. If you have exposure to things like the California Privacy Act or GDPR, there can be exclusions or limitations related to those acts. So you certainly want to be aware of those. Whether or not breach costs are considered inside or outside the limit is something to be aware of. Time deductibles on your business income as it relates to a cyber liability event. So if you have a ransomware event and you lose the ability to generate income, are you waiting 8 hours, 0 hours, 24 hours, 72 hours? When do you access that business income limit? And as you become a medium enterprise or a large enterprise and your daily income becomes significant, waiting 3 days before you can access that limit may not be something you want to do. You might want a 0 hour time deductible or an 8 hour time deductible or something more reasonable, right? So there's a lot of nuance to the policies, and the nuance will change based on your business model. If you're a call center, you might be more concerned about bricking and the limit you have for bricking because you're hardware heavy. Right? If you're not hardware heavy, but you have a lot of third-party vendors that are large enterprises, You might be much more concerned about things like reputational harm or privacy liability. Duty you owe to those third parties. So it will be context driven, but certainly a lot of nuance. Yes.
Absolutely. That's great. Yeah. Wow. I didn't even know about some of that stuff. That's great. So I hope it's helpful to our listeners. So let's wrap it up here. You mentioned earlier that my business, what we do for a living, cybersecurity is ever evolving. The threat landscape is changing. The bad actors are always thinking up new schemes, which is the challenge that we're faced with, because we have to educate and then continuously educate our clients on what they're doing. But when it comes to this type of insurance, is there any recommended time frame that somebody should reassess what they've got? I mean, is it just on policy renewal, or is there anything else there?
Should certainly be no less than policy renewal, right? But I would encourage people, develop a relationship with your insurance provider, with your broker or agent, and in developing that relationship, make this a priority, because this is a number one risk for a lot of business models, and it's a top 5 or top 3 risk for any business model you can think of. So this does need to be a part of your conversation beyond just the renewal. And things that should cause you to think about, maybe I should talk to my agent or my broker, are changes in operations, whether that be the clients you work with, the geography you work in, the types of contracts you're entering into, any of the above, right? Any change in business operations could be reflected within the insurance policy. So unless you are a very static business and you've stayed static since the last time you talked about it, if you have changes that are either in consideration or have occurred, call your agent and make sure that the coverage is still reflective of the operations.
Yeah, that's great advice. And at any point, if a business owner, manager, executive feels that they're uncomfortable with their current provider in between renewals, is that an acceptable practice to still, go ahead and do some research then?
Oh, absolutely. Yeah. So if your current solution is not working for you and you're in the middle of the term, don't wait. It's your business, right? It's your balance sheet that's at risk. Don't wait. If you need to find a new relationship, find that new relationship.
Yep, absolutely. That's what I was hoping to hear. Joseph, 2 years, man. That's been great. What a change. So there's been drastic changes. Sounds like mostly for the better for the consumer, which is rare, but incredibly great news. Really want to thank you for your time today. And let's have you back in another year or two, so you can tell us what's changed then. And that's a wrap for today's episode. Cyber liability insurance is changing fast. And if there's one thing we've learned, it's that businesses can't afford to ignore it. Staying ahead of policy updates, security requirements, and potential exclusions can make all the difference in protecting your company. Connect with us on social media at One Step Secure IT, and we'd love to hear from you. Until next time, stay safe, stay informed, and we'll catch you the next time.